Greetings. Welcome to my weekend market recap 18th December 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. This is my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. I regularly share live market and stock analysis on these channels. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. These are the Q systems I use. They work as add-ons to the TradeStation and Metastock platforms. I released an enhanced and simplified version of Q Dives, that is these programs. If you are using Q Dives, Diary Index Vital Edge Season, then you may download the latest version from the download page. You may remove the existing version and just replace the latest versions in your working folder. No other installation step is required. Let's continue with a look at the global market, starting with Australian index all ordinaries. In the daily, we can see all ordinaries is bound by trendline resistance and trendline support. It is right in the middle. That is not a trading area for swing trading. Directional swing trading will avoid taking any trade. Japanese market Topix index also moving sideways inside a triangle pattern. Multiple supports, also trendline resistance. If price goes up from here, shall we take a long trade thinking that it has a nearby support? I will not do that because there is a trendline resistance immediately above. So if we have a higher closing on Monday, for example, that closing will come too close to the trendline resistance to take a long trade. What if price goes down from here? Then it will come pretty close to the white direction line and also the weekly trend line support. Therefore, if price comes down, will not have a shorting opportunity, that is low risk. That almost always happens when we are in the middle of a range, and that is true in this case also. Topics, we don't have any directional swing trade, moving sideways. China market CSI 300. Earlier it was range bound for a long time. Then it broke out, and when it broke out, in the last webinar I mentioned that I was not going to buy the breakout. Instead, I would wait for price to pull back and then go up again. It has pulled back. It is still at the upper edge of the range. Now if it goes up and gives a cyan color candle in the daily, that may signal a go with flow trend following long setup. If we don't trade the index at that time, we may look for underlying fundamentally strong stocks. Right now there is no trade setup, and because it is back inside the box, we may say that this was a false upside breakout. So far it looks like a false upside breakout, and we are back to a range bound situation. What about UK market FTSE index? Range bound, very clear. Trendline resistance support in daily, weekly, both. 4 out of 4 global markets are moving sideways. Lastly, India's Nifty 50, it's also range bound. Now, if you look back, right when the bearish headwind appeared in the weekly, I mentioned that Nifty 50 was looking weak, and since then it has continued to fall down. If you look at all the weekly bars, since the bearish headwind came, it never turned cyan again, remained magenta or yellow. So it is continuing to remain weak. At present, inside a range. So all the global markets are inside a range. And if we look at the USA market, we'll see that USA market is also in a range now. Let's continue to use Q Global. I find it easy to flip through charts on Metastock. Starting with QQQ, range bound. Instantly we see range bound. We are not going to take any directional trade now. If you notice this day, let me magnify it a bit, rescale it a bit. On this day, Wednesday, the central bank decision came out, and I noticed many people in many forums were bullish on that day because the closing was bullish. However, right on that day, I remember right on that day, in spite of a very bullish closing, I tweeted that I was not going to buy because QQQ was right at trendline resistance. And not only QQQ, all the other market ETFs were near trendline resistance at that time. That analysis was very useful. I didn't take any long, and good for me, price fell down. I know many growth stock traders bought on that day, and they were stopped out immediately the next day or the next day. The trendline resistance was there in other market ETFs also. Okay, now that trendline resistance is broken, so what we may do, let me see, it's useful to look back. If I can locate it into Twitter, yes, this was the tweet. Another reason I was not ready to buy was the market ETFs are all near trendline resistance. I will wait to see them broken before buying. I tweeted it on the day the Fed meeting result came out. This was SPY, right at trendline resistance. This was QQQ, we already saw that. This chart is using Q Eliton Trace Station, right at trendline resistance. This was DIA, right at trendline resistance. And this was IWM, little bit below trendline resistance, close enough so that I could not take a long trend. The automatically drawn smart trend lines called memory trend lines came of very good use in this case once again. Another reason why I did not want to buy was to some extent surprising to other people, not to me, not to Hindenburg followers. A bearish Hindenburg signal came right on that day, on a very bullish market ETF day. I'll come back to the Hindenburg later. Let's continue to look at the market ETFs as of now. So SPY also had a trendline resistance right at this point. Then it fell down. Right now, if we see, it has watermark resistance, trendline support, watermark support, range bound. Interestingly, there was a bearish headwind here, another one here. That was another reason I was not going to buy on this day. When a headwind comes and price falls down from there, when price retests the same level, it is expected more often than not that some more selling will come in. So I was not going to buy for many reasons on the Fed decision day. Now it is range bound. We saw QQQ also range bound. Let's look at DIA. DIA is strictly speaking not range bound. It has a lower low, lower high. It has a bearish flow on Friday, bearish backdrop for the week, and in fact the ribbon is showing that we have a go with flow trend following short setup on Friday. So this is one ETF that was stronger earlier, but currently it is giving a possible go with flow short setup. You may look for industrial stocks for shorting opportunities. I see it had a bearish pressure on Friday, bearish pressure and bearish U-turn for the week at pendulum high, very high bearish volume on Friday. In the alternate chart, we have viable gap up, but you may say viable gap down. The opposite of viable gap up, bearish side. So viable gap down on Friday, bearish pocket pivot, bearish MOBO breakout, bearish kahuna. Plenty of momentum signals. Bongo turned red. Closed below the 50-day moving average, closed below yellow direction line. In fact, closed below, if you notice carefully, if you are not able to see the lines clearly, you may check them out on your own system. In fact, closed below 4 of the 1, 2, 3, 4, 4 of the 5 direction lines. Only white direction line is far away. The other 1, 2, 3, 4 direction lines are just above the closing price of Friday. So this is where all the direction lines came together and they may diverge again. Those are higher probability directional trades, in this case bearish direction. So we may look for shorting opportunities in industrial stocks. Lastly, IWM small cap ETF. If we look at the weekly chart, it was inside a box for a long time. Briefly, it broke out, and I mentioned at that time, before knowing the result, that I was not going to buy. Again, there was a bearish headwind at the same level. I would expect a false upside breakout that happened. Price fell down. It is now near the lower edge of the sideways range. So I will look to buy. However, there is a trend line resistance nearby. In fact, I remember on this day, one gentleman wanted to buy, and I mentioned that it was looking good otherwise because it had watermark support in daily, watermark support in weekly. It had a sharp drop to that level. He retested that same level and created a false downside breakout. Price went up and closed bullishly on this yellow candle. Those were all looking good. It was also going up from the white direction line. What was not looking good was that the trend line resistance was nearby. That was the reason I was not going to buy on this yellow candle. That was also one of the reasons I would not buy on Friday's close. The trend line resistance is too near, and also on Friday we have a long upper tail. However, I will look at small caps carefully. IWM is having a trend line resistance. However, there may be small cap stocks that are giving proper buy setup now, probably reversal type of buy setup. And when I announced today's webinar on Twitter, I mentioned that market is range bound. Now we see, other than DIA, the three market ETFs SPY, QQQ, IWM are range bound either in daily or in weekly. I will wait for price to break out of the range. In case of IWM, that breakout will happen if I have a trendline resistance breakout. And in the same tweet, I mentioned that market may turn more bearish. I will look at the market from different angles to show that that possibility is there very much. As a whole, market may fall down further, but small caps I may look to buy now. One more reason to look to buy small caps is that the jump and thrust both, it is important that both, not only one of them, both reached the extreme low magenta color, and then it has also retested the same level second time. If it goes up, that will be another reason to look to buy small caps. Why did I say that the market may also go down? Has it not come down enough? Not really. Other than IWM, the others have not really come down enough. And if I look at the market from other angles, let's look at sector, industry, stock, advanced decline breadth. Sector, industry, stock, advanced decline breadth, 1 month to 1 day. 1 month is bearish. 5-day is bearish. 2-day is bearish. Even 1 day is bearish. Only 10-day is bullish. 1 day, 5-day, 2-day, they are bearish but not extremely bearish. Friday, for example, 55% of sectors were down, 58% industries were down, 58% of stocks were down. Not oversold. Oversold would be more than 80% bearish. That is not true. Because it is not oversold across any of the periods, be it 1 day, 2 day, 5 day, or even 1 month, not oversold. In any way, it is possible that market will drop further, be oversold, probably stop out weak hands before starting to go up. The other indicator that it may fall down further is from the bucket analysis. The percentage of stocks in the lowest bucket, that is percentage of stocks below lower Bollinger Band for all S&P 1500 stocks, is only at 3.1%. It becomes oversold when the percentage reaches 30 to 40%. It is nowhere close to that. Is the market overall bearish? Yes, we saw that from sector industry stock advance decline, and that is looking inside the market, not just looking at market ETFs. Market ETFs were telling that market is in general sideways, but when we look deeper, sector industry stock advance decline is showing it is actually bearish. And bucket analysis, if we see the percentage of stocks below mid Bollinger Band is more than 50%. So from that angle also, market is overall bearish, not oversold, but bearish. Now if we look at technical breadth, let's see what we can gather from there. Technical breadth, that is balance between bearish and bullish signals. First looking at the weekly interval, all signals 71% bearish, strength signal 79%, trend continuation 71%, trend reversal 60%. Everything is bearish, but not oversold. Oversold would be the all signals hitting 80% bearish. That is not true. So here also, like from sector industry stock advanced decline rates, like from bucket analysis, we see the same thing here, bearish but not oversold. And now if you look at the percentage of stocks showing bearish headwind in the weekly interval, it is 1.8%. Whenever this percentage is above 1%, then we know that there is overall bearish pressure on the market. And that is another reason I tweeted that market may fall further from here. That is the weekly interval analysis. What about Friday's technical breadth? All signals 58% bearish. Strength signal is also bearish 77%. Trend continuation 60% bearish. However, trend reversal is bullish 67%. And I see the reversal signals in absolute number is comparable, in fact higher than the gap down numbers. Therefore, strength and reversal taken together is actually bullish. If you look at the bullish headwinds in the daily interval, that percentage is also quite high, 3.1%. That is another reason I think some reversal trades may be there in the long direction. And earlier, when analyzing the market ETFs, I explained what kind of stocks I will like to focus on, small cap stocks, because that is also at watermark support, white direction line support, retesting that support. If it goes up, it will give low risk reversal trades, and the reversal is bullish overall. So I will not mind looking at possible reversal trades in small cap, and the bullish headwind in daily interval percentage is also in support of that view. Now if you look at this pie chart, where are the bullish signals coming from? Remember earlier I showed this pie chart in live webinars when most of the bullish signals were coming from the green area, price extreme high, and mentioned that was oversold condition. But now is not such a case. Now most of the bullish signals are coming from price extreme low. That will be very lucrative buying point. And those may be reversal trade setups. All these things are coming together. The percentage of bullish headwinds being significant in daily, reversals being bullish, and most of the bullish signals coming from price extreme low. They are all pointing to possible reversal trades at low price level. What can we further infer from market analysis. From which part of market analysis? From market breadth studies. We can further look into internals, and let's look at the total view first. Few things to notice. This is the Hindenburg that I talked about earlier. That Hindenburg appeared on the Fed decision day on Wednesday. That was another reason, other than the trendline resistances being in all the market ETFs, that I was not ready to buy on that day. And as usual, as always, I mentioned that before knowing that market would fall on Thursday, Friday. And market indeed fell. The Hindenburg came very useful. And the Hindenburg is another reason appearing multiple times in recent days, coming here on up day, coming here on up day. This one was on down day, but we also had Hindenburg coming on up days. That is another reason I am thinking that market may go down further as a whole. At the same time, if I look at these three candles, and what is this candle chart? This is not one market ETF, it is the total view custom index that is calculated based on the two composites and four major indices. That custom index, it seems it is finding support at this level. The lower tails are showing that. That may indicate a move up, but not in all stocks probably. I also wanted to look at the custom index, market breadth total view, using the usual Q entry charts. And here I see there are many trend line supports, plus a bullish headwind at this level. That is one reason I think market may find support and probably go up, at least in some category of stocks. It may come down little bit, maybe even break below one or two of the trend lines and then recover at least somewhat to give profitable bullish swing trades. These trend lines and the existence of bullish headwind at the same level is telling me that it is okay to look for low risk buying opportunities. Let me magnify this chart. Let's look at growth versus value. What is doing better? In this area, growth was doing better. After that, from early December, we see growth versus value is starting to tilt down. Therefore, growth is not doing well right now. And the cyan line, small cap versus large cap, that is continuing to tilt down. So far, small cap is doing worse. At the same time, I showed that IWM is at the lower edge of a very long-term weekly box pattern. So this pattern, that small cap underperforming large cap, may change because IWM is at support. Small cap may start to outperform. It has not done so yet, but if the IWM trendline resistance is broken, small caps may start to do better. And at that time, I look for buying opportunities in small cap. If I look at the percentage of stocks above 50 MA for the custom total view, that is at 45% level, below the midpoint of, sorry, not the white line, I should look at the yellow line. The percentage of stocks above 50 MA for the total view, it is around 37%. Below the midpoint 50% level, below the average line, and it is coming down in this area with lower high, lower low. That is also bearish, and that is pointing to possible move downward. If it comes close to the 20% level, red line, then that will be oversold condition and I will more confidently look to buy. But it is not there yet. Also, if I look at the 3-month new high low for total view, it's right in the middle, neutral area. If it comes to the lower extreme or near the lower extreme, then I will start to look for buying. It is not oversold enough to look to buy as a whole. For small cap, it is different. Now this is total view. What if I look at Nasdaq versus Nyse? Let's look at the percentage of stocks above 50 MA. Well, I am doing this live with you. It is at an attractive buy point, in fact. For Nasdaq, it is at the red line. So percentage of stocks above 50 MA for Nasdaq as a whole has hit 20%. That is a point where I will start to look for buying, and it seems to retest that level for the second time. If it goes up, I may look to buy. What is the exact percentage? Around 20%. That is Nasdaq. Where is NYSE? It is around 30%. So NYSE is about 10% more bullish in terms of this study. And we are seeing this pattern continuing for a long time. Earlier, it came to the red line. That was a point to start to buy some stocks. Now it is coming down, but not at the red line yet. So it is bearish, but not oversold enough for NYSE, but it is so for Nasdaq. Also, looking at the Hindenburg, we can see the Hindenburg, the last two appeared in NYSE, not in Nasdaq. So with all these studies with us now, what is the outlook? The outlook is that market is moving sideways. Market is moving sideways. No question about that overall. Inside that, small cap is oversold at long-term support, lower edge of the box. I may start to look to buy. Will I buy small cap from Nasdaq or NYSE? This composite breadth study is showing that I may start to look to buy Nasdaq small cap stocks because that is at oversold point where it is retesting, and also you can see now that the Hindenburgs came in NYSE, not in Nasdaq. Of course, Hindenburg was originally designed for NYSE only, not for Nasdaq. Here it is plotted for Nasdaq also. Still, we have to accept the fact that we don't have Hindenburg in Nasdaq, but Hindenburg in NYSE. Total breadth shows Hindenburg coming from any of them. That is another reason maybe that we may look to buy Nasdaq stock, small cap stocks. Now, if that is the conclusion, then what kind of industry or sector shall we focus on? That is a very easy decision to make from QH. Let's look at the sector performance. Friday's strongest sector was healthcare, and healthcare was weak for a very long time. It was the worst performing sector here, score 1 or 3 or 4, and now it became the strongest one, 11, 11, 11 and 10 here. very strong. That is a turnaround sector. So we may look for small cap, we may look for stocks in Nasdaq, we may look for healthcare stocks. We may also look at the second best sector on Friday, which was the strongest on Thursday, Friday together. That was also very weak earlier with score 1 to the worst scores. And if I look at the pace columns, communication services is showing very strong acceleration, the best possible acceleration score of 11 over 2-day and 5-day period. So we may look to buy these stocks. That is how this market sector level analysis, this kind of top-down analysis helps us decide what is our market bias. If market bias is sideways, can we drill down further? And we indeed can. We may look for small cap buying opportunities, maybe in Nasdaq and in healthcare and communication services. That is top down. Now from Q Finder, we saw, let's look at the bottom up now. Top down, we have come to a certain stage. We may drill down to healthcare, communication services, find strong fundamental stocks with buy setup, proper buy setup. Let's now look at the bottom up, starting from Q Finder. We saw that reversals are bullish. We saw significant number of, or rather percentage of bullish headwinds. So we may look to buy reversal trades. Let's do that. Go to bullish signals. Further look for stocks with actual trade setup, one or other or multiple. Because we saw significant percentage of headwinds, let's flag the headwind trades, 43 stocks. You can see it from there. Now let's carry out a fundamental analysis. That will be bottom up. Now instead of carrying out a fundamental analysis, let's look at the technical charts. Why did I say that? Normally I would like to carry out a fundamental analysis, but today I said instead of looking at the fundamentals of the stocks, let's look at their technical charts. Why did I say that? Has a reason. I saw that the best performing sector was healthcare. And we know healthcares were weak for a long time. Biotechs were also weak for a long time. I'm focusing on small cap stocks. Some of those stocks may not have great fundamentals, but they may be good buy setups, especially for small cap biotechs. It's not required to have great fundamentals. That is the reason why for today I mentioned when I'm doing the bottom up analysis and I have those things in mind, small cap healthcare, I said let's not look at fundamentals, at least not in the beginning. At the end we'll always look at fundamentals. Whether it is strong or not, we will know. Whether we will take the trade or not is a different thing, but we have the real-time tools. We will look at fundamentals, but instead of looking at the fundamentals, let's look at the stocks that went up by at least 1% on Friday. Let's focus on them. These are all headwind signals. They may have some other signals also. You can see here, if you can see my cursor, some of them are also having breakouts. Some of them are also having bounce. Some of them are also having box, many of them in fact. That will be a nice combination, isn't it? Box or bounce with headwind. That will be a very nice combination in fact. At support, at lower edge, with a headwind signal, and some of them have reversal candles as well. That's very good. So I could do multiple things from here. One thing I could do is that why don't I choose the two that are having many signals. Headwind, of course, I flagged for it. They are also having box. They're also having reversal. One of them has a breakout, and incidentally both of them have bullish pressure, and they are both at price extreme low. That is the kind of setup we would have in mind when we did the analysis with market ETFs, market breadth, Q edge, and Q finder. Let's look at these two stocks. HT. It has a bullish headwind. Let's look at it using the usual 3 chart template. Sometimes the support may not be there in the daily, but it may be there in the weekly. But no, there is no support here. No nearby support, neither trend line support nor watermark support. And the weekly candle is quite bearish in shape. Though it has a lower tail, it doesn't have any apparent support. So I'm not going to consider buying this now. HT. Let's close this. Other stock is VKTX, Viking Therapeutics. This is looking more interesting to me. It has many signals. So let's look at it using the 3 chart template. This is now looking even better, isn't it? What I was looking for is a stock at support, either in weekly or in daily. And this one has support in weekly in terms of trend line, also at a watermark support, bullish shape candle, bullish indecision in the weekly. A little bit move up from here will create a false downside breakout. False downside breakout with a very long lower tail is a bullish signal. What we have in daily? We have a long lower tail with bullish headwind. However, trend line resistance was right above it. So we were not going to buy. That was Wednesday. Thursday price fell and Friday price went up again. Not only that, it broke the trend line resistance and it displayed another bullish headwind on Friday with bullish pressure, with bull release, with a reversal signal at pendulum low with very high volume. Plenty of bullish signals at support at very low price level, pendulum low. What we have in the alternate chart? We have near jump and thrust low. Thrust low, magenta dot, jump approaching the magenta dot. And here we have a very powerful momentum signal, especially when that comes, I have mentioned many times before, at pendulum low. 3-month big move up. 3-month big move up at pendulum low. Most of the times it means further up move is ahead. This stock is looking like a possible buying opportunity. Quite low price stocks. Stock $4.9. Low price therapeutics. So it may be a biotech. Now you can see why I did not want to look at fundamentals first. Then I don't know its fundamentals is good or not. Let's check that out. But it may not be strong. It is a low cost, low priced, at least low priced biotech. Let's look at its fundamentals. VKTX. Low cost biotech may go up even if fundamentals are not strong. That will be all right. We may still look to buy. Let's confirm the industry for VKTX. Indeed, it is a biotech stock. And as I anticipated, Fundamentals are not great. Earnings growth negative, valuation in the middle. It has a short squeeze potential. Friday went up by 5.6%. And the industry itself was very strong. 86% of biotech stocks went up on a day that was overall quite bearish. Friday was quite bearish overall. But 86% of biotechs went up. In itself, biotech was strong. And if I check out its relative score, we know healthcare sector was strong. Let's see biotech industry inside healthcare. How was it on Friday? Well, it was very strong. 143 out of 147 industries. I usually don't look at the number so long as it has checkered backgrounds and color. I know it is among the top 20%. So it is among the top 20% of the industries, has some acceleration, was weak earlier. So VKTX is a possible buy, low price biotech. It has a long upper tail on Friday. So I would not buy on Friday at the close, but on Monday, if it can go above the high of Friday, it will give a very low risk buying opportunity. And once again, I like to mention, nothing is guaranteed in trading, but this 3-month big move up at pendulum low, and we have many other signals, reversal, bull release, bullish pressure. But especially again, the 3-month big move up at pendulum low more often than not points to a further up move ahead. That's how we could use the bottom up analysis to find buying opportunities, as I promised I would do in my tweet. Let's also carry out a top down analysis. Why not? We have the tools and we still have some time. Let's go back to sectors, healthcare. In fact, why only healthcare? We saw healthcare and communication services. Both sectors allow us to buy. Both are very strong. Now, the strongest two sectors, and one of them is accelerating fast. So let's look at the underlying industries, doing top-down analysis now. I will not look at all the industries because some of them are not strong. I like to look at top 20% that will have checkered background, cyan color. So these are the industries I want to look at. Let's look at, not, I don't want to be restricted to S&P 1500. So let me do one thing. I have my trading universe, that is usual trading universe, mid and high price stocks. I want to find stocks from this universe belonging to those strongest industries in those two strongest sectors. So first I'm calculating a scorecard of these liquid stocks. These are all the liquid stocks, mid price and high price stocks in the USA market. Give it a few seconds to carry out the fundamental scorecard analysis. Then I will do a drill down from the industries to these stocks. Okay, it's updated, scorecard is calculated. Let's go back to Q Edge. These are the top 20% industries in the two strongest sectors. I'm going to drill down to stocks of those industries only. These are the stocks. Now again, because there are some biotech stocks, healthcare stocks, for them fundamentals may not be required. Let me just sort by price and see the percentage move up on Friday on an overall bearish day. Large percentage moves. If you look at the industry column partially hidden, you see where they are. Biotech, 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 full of biotechs. And because that would be expected looking at healthcare being strongest, I didn't want to start filtering by crown jewel or 3 star because we don't need great fundamentals for buying low priced biotechs. Because there are lot of stocks, let's find the stocks that are up and many of them. Let's therefore focus only on stocks that went up by, let's say, 2%. And then look up their technical setups from Finder, top down. Look for stocks that don't only have signal but have proper setup, one of more. We have 35 stocks. And you see VKTX again comes here. That means whether we start with top down or bottom up, because we are applying the same dimensional analysis, checking fundamentals. I didn't do it yet, but we will always end up checking fundamentals, technicals, sector industry strength together, whether we do top down or bottom up. And we'll come to the same stocks, like in this case, VKTX we already saw. Let's not look at it again. Let's look at, we saw the headwinds last time. Why don't I look at breakouts? Many breakouts. Then let's flag the breakouts. Let's also look at the ones that are breaking out with pressure. We will be more interested in them, isn't it? Breakout with pressure. And I would like to look for stocks at price extreme low. Why? Because I'm looking for small cap stocks, because IWM is at a lower edge. I would like to look for buy setups matching that. So price extreme low, breaking out with pressure. And I happen to find many reversal candles. So why don't I look at these first? 8 stocks. Let's open these 8 stocks. I'm opening the stocks with daily first. If I see something interesting, I will come back to that stock with the 3 chart template, weekly, daily, daily. This one, the first one, SAGE, Sage Therapeutics, biotech again, $41.5, around that. That's good. It's looking interesting. I'll come back to that. Let's move on to the next stock, Sgmo, looking interesting. I'll come back to that. IONS, also pharmaceuticals. It has one breakout but another trend line resistance nearby. Here, one breakout but another nearby. I have better breakouts already, so I'll close this. Next one, MAGI. One breakout but other trend line nearby resistance. Let's close this also. OSH. OSTR Health, also biotech or healthcare stock. This breakout is looking interesting. The next resistance is far away. I'll come back to it. Fate Therapeutic, again biotech. It is closing very close to the trend line resistance, not a decisive breakout. If I did not have the other stocks, I would not mind checking this out, but I have better breakouts already. Let's close this. BBIO, also pharma stock. Very nice decisive breakout. In fact, very nice bullish headwinds, multiple of them, bullish pressure, bullish reversal at price extreme low. And remember what I filtered for using Finder with a few clicks: pendulum low, reversal candle, bullish pressure, breakout. But it has another trend line resistance, yellow line. I could look at it, but I already have many. Let's close this. American Well, one breakout but another trend line resistance nearby. Close this. Back to Sage Therapeutic. Now let's look at these stocks with the standard 3-chart template. Sage Therapeutics. Now it's looking even better, isn't it? I opened it with weekly, daily, daily. What do we have? In weekly, a bull release 1 week ago, but price was still below the weekly trendline resistance, though backdrop color had turned bullish. This week, overall bearish week, it has a very nice decisive upside breakout from trendline resistance. Bullish shape, bullish color. Weekly is telling okay to buy. Daily, excellent. Bullish headwind. First price went up from there as we could anticipate, retested the level, created a false downside breakout. At the low level, again it displayed another bullish headwind, false downside breakout. We would not buy because there was a trendline resistance which was decisively broken on Friday. Relative performance sharply tilted up, bullish pressure, bullish reversal at pendulum low. Weekly daily is telling us it is ready to buy. SAGE. In alternate signals, we have Bongo Green, a channel breakout, but the channel breakout is not that important. We already have much more powerful for making bullish decision, the trendline breakout. But we have other signals. 1 month big move up, 3-month big move up is better, but here we have 1 month big move up from pendulum low, and more importantly we have pocket pivot, MOBO breakout from a squeeze with Kahuna. Plenty of momentum signals. SAGE, I would not mind buying at Friday's close as well. And certainly it's possible to buy on Monday. Why don't I look at its fundamentals? I am not looking for great fundamental stock for low-cost biotech, but we have the tools. No harm looking at it. Sometimes we may be pleasantly surprised with a small price or low-cost biotech that is also fundamentally strong in one way or another. Let's check that out. That will not be a deal breaker. It's a biotech. Medium valuation, negative earnings growth, similar to the last stock we saw, and a short squeeze potential. We already know biotech, strong industry in itself, and relative score was also strong. So Sage is also a possible buy. We may not need strong fundamentals. Let's look at the next stock, Sgmo, Sangamo Therapeutics. Let's look at it using the 3-chart template. Here also we have nice pattern. In the weekly, see how these signals help us make an unambiguous decision. A bullish headwind came here, retested the watermark created by the bullish headwind, long lower tail, false downside breakout. That is a bullish signal with a bullish indecision. High volume in weekly, even in weekly pendulum low. In daily, we have many other bullish signals. After bull release, price went up, a retest, came down, bullish headwind in daily also, and then price broke out of the trendline resistance on Friday, sharp up move of relative performance, bullish pressure, bullish reversal, pendulum low. In the alternate signals, bongo green at the lower end of the channel. False downside breakout at the channel also. So we have false downside breakout at the watermark in daily, at the watermark in weekly, and also at the lower channel. Jump and thrust low. 1 month big move up at pendulum low, and we have a kahuna here. Enough bullish signals, and if you look at the daily weekly, another very low risk trade. Stop will be close by. You could buy on Friday at the close, or you could look to buy on Monday as well. Let's look at this last stock, OSH. A bullish headwind in the weekly 1 week ago that had an upper tail and lower tail both. This week price went up further, bullish shape, bullish color, trendline resistance is far away. In the daily, bullish headwind, we would not buy at that time because trendline resistance might be there. Now the trendline resistance is broken on Friday decisively with bullish color, bullish shape, bullish pressure, reversal candle at pendulum low. In the alternate chart, bongo turned green. This is nice. 3-month big move up at pendulum low. More often than not, it points to a further up move ahead. On top of that, pocket pivot, Mobo breakout from a squeeze with a kahuna. Plenty of momentum signals. So we found several stocks, OSH. Let's check it out in terms of fundamentals. Is it biotech or not? We know biotech as an industry was strong. OSH, is it a biotech or is it a com services stock? Because we also are drilling down into communication services sector. Let's check this out, OSH. This is also healthcare services, not biotech, but healthcare services. Fundamentals not so great, which is probably okay. Valuation not great, not good earnings also. We already found other biotech stocks where there was no earnings growth, but valuation was yellow, not magenta. So if I already have nice looking breakouts in those, why will I look to buy OSH? It is fundamentally weaker. So I will not choose OSH, but I would choose VKTX, that was the first stock. Then we found FATE, FATE, I think Sgmo and SAGE, if I'm not mistaken. You could get to these stocks, all of them in very strong sectors, very strong industries, very low risk technical buy setup, plenty of momentum and bullish signals. In fact, low risk buying opportunities, fundamentals not great, but that is fine for low cost biotech or healthcare stocks. That is why I mentioned that market may go down more, especially in some categories of stocks, but there are buying opportunities right now that are low risk in turnaround sectors and industries. Like this, almost every day you are able to find attractive buying or shorting, as the case may be, opportunities using these 100% real-time systems. We are at the 1 hour point. I'll not take more time. Thanks a lot for joining. I look forward to seeing you in my next public session. That will be next weekend. Have a great weekend. Keep safe and No reason not to do that. Trade profitably. Thank you.